The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Chapman.
Hi everyone, Basil Chapman on this 5th day of October. My pleasure to be here. Dow's down 234 at 26,394. I'm going to spend some time today, Technical Friday. I'm not sure how many answers I'm going to get. Got a whole bunch of emails already and texts, but let's just go right to what I want to talk about. This candle here that was formed at the end of the day yesterday is what I call the Chapman Wave Roman candle. Over the many years I've been here at TFNN, every time we've discussed it, and for subscribers to my opening call, I'll have a little bit more about it over the weekend, hoping to be able to get charts out as I usually had done for 13, 14 years. There's a little issue here. I'm hoping to resolve it. I need to get charts out so you can see what I'm looking at. You see this candle in the monthly chart from February of this year? That's what I said was a Chapman Wave Roman candle. The rule of thumb, if you go back to, I wonder if I can just do this now, it'll save me some time. Yeah, if you go back to, there it is. This is what I'll be sending out. I haven't quite finished the notation yet. If you go back to 2007, the October high, the doji candle leg F high that was made in the monthly chart was followed by a Chapman Wave Roman candle. And the rule of thumb is within 2 bars, I usually like to see it within 1 bar, but within 2 bars, if it takes out the middle part of the long-legged wicket on the downside and holds there in a shorter time frame and holds it for a certain period of time, there's a real good chance that you're going to go straight down to the low of that bar and probably break it and then try to rally. Well, look what happened. Took 1 bar and then kaplop. Then we had another one. Then we had a whole series of that. That was then, and in 2018, we had this one right here in February. And what happened is that eventually it was the only index within 2 bars of that Chapman Wave Roman candle to go to a lower low. It went to 23,344. The other one was around about 23,360 in Feb. So this is very important. Why? Because we've already achieved that. Look, there it is. Chapman Wave Roman candle. What is the Roman candle? You know, in fireworks, I'm not a big fireworks fan. I like to watch it every once in a while, only as a kid. Back in South Africa, we used to have Guy Fawkes, F-A-W-K-E-S. Guy Fawkes is the guy that tried to blow up Parliament in England once because we were part of the British Commonwealth at the time. So they used to always have, I hated Guy Fawkes. They used to have these figures that they would, I was just a little kid, and they'd have these figures that they'd walk around and they were going to burn them at the stake. Oh, I hated it anyway, but that was fine. So the Roman candle is the one that you like, and it blows up and it has a spectacular coloration, and then there's nothing left. Well, this is the candle, Chapman Wave Roman candle. It has a tiny little wick, has a long leg to the downside, and then suddenly, for whatever reason, there's like a 50% retracement. Not the point. The only point is that it occurs within 1 or 2 bars of a potential serious top, and either an all-time high or a recovery high. Usually it's all-time highs. This is only the daily. If it was a monthly chart, I'd say, whoa, watch out, major sell signal coming. But we haven't even, look, monthly chart, it doesn't even know what's happening today. It's still way up near the highs. The weekly chart is turning down, but the technicals are still really strong. We have to go one step at a time. So when I said yesterday that we'd gone short of the opening, and look what's happened. We went into this middle of the bar, and I said to subscribers, and both to the subscribers and to the folks in the den this morning, that if the E-mini takes out 2,900 and starts to hold there for more than 2 hours, it was actually 2 minutes, it's liable to go down and test the low. Well, not only did it test the low, but we've gone from the high of 2915.50, we went to 2880.50. We're now at 2885 in the E-mini. All right, let's get back to the Dow. Now I can go through the market. So the Dow is down 230 under both the green line, that's the 9-period exponential moving average, which isn't even close to crossing below the 14-period moving, the black line. 26,493 is that. We're under it, but we are getting to the Chapman wave inside track, up channel, support. Just hit it and try to bounce off it. This whole area between where we are now and 26,391. If you look at the 120-minute chart that I showed yesterday, made a Chapman wave 5 peak E at 26,951, went down to 26,471. That was, in fact, leg 1, Chapman wave 1, Chapman wave 2. This is Chapman wave 3 coming to the downside right now. And that's the way I'm leaving it at this point, a leg C. And here you are, 26,372 was the Chapman wave automated support level. And the low so far today is, let me, if I can just get back to that. The low so far is 26,353. We went 20 points under it. Let's see if there's a little bit of a bounce being attempted right now. S&P, SPX. The S&P is down. So the Dow is down 0.93. The S&P is down 0.76, down 22 at 2879.63. There's your Chapman wave Roman candle. We went under it, and now we're almost hitting the 50-period exponential moving average. That's around about 2875. Weekly chart made a potential peak G or a peak C1, C2, double top. I'm just watching this and I'm saying, you know what? The monthly chart is also very strong. We need to see any weekly close below 2856 will be the first sign to say, uh-oh, this is a real problem. Now, I have another issue. The issue is that in my monthly charts, look, this is a peak E that was made at 2940.91 in the monthly chart. E, this is where you got to be careful. Yep, there could be a recycle, but the Dow is making it in the monthly chart a leg F/B. The QQQ trading right now down 2.83, minus 1.55% at 179.53, has just taken a deep dive off a peak E at 187.53 all-time high just over a week ago. And the weekly chart is finally, the MACD is negative, stochastic's negative, and the price has gone below the 14-period moving average. I've been warning about the Amazons, etc. This is my cash index, Cintas, Amazon, SPY, and Home Depot, and that's been really accurate. Be careful. And this is a leg, I'm calling it an F for now. Maybe there'll be an alternate count in the monthly chart. But I've got to be careful in this particular instance. Look, Amazon, leg E with a kind of a doji candle in the monthly, hasn't made a new all-time high. Peak E in the weekly, negative MACD, stochastics under 80%. It's testing the 14-period moving average for the second time in 2 weeks. And this peak that was made at, what was it, 20... If I should remember it, I've said it enough times. 2050.50 on the 4th of September with a 2013 round number low. Wow, you've got to be a little bit careful here. Now, the reason, I hope I'm going to say this now so I remember to do it after the break. The XLF, we didn't fall for the XLF rally yesterday, or the IAA, the broker dealers, because that looked like an aberration. We'll talk about that when we get back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9797. 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So we're looking at the IWM, the Russell 2000 at 161.49, minus 214, down 1.31%. It's gone, I think it's about 8% from 173s on August the 8th, peak F in the Chapman Wave daily chart. It's gone to trough G/C. MACD's really bad. Stochastics is totally flat, 11%, showing no strength. And the weekly chart turns out to be a peak G. I thought it was G/C. We had to wait to see. And now it was just so quick that this week it's just gone to a G. MACD is very poor, stochastics is very poor. And that monthly chart, for the first time, is starting to really turn down in the technicals. It is just right now on the 9-period exponential moving average. So this Russell 2000, got to watch it, monitor it really carefully. So now this is the issue. The XLF is down 7 cents. Not a big deal, but that spike that we saw yesterday in many of the like Bank of America, even Goldman spiked yesterday. It seemed to me that was news related. It had no fundamental veracity or anything like that. So Goldman's down 2.54 again today. I don't see the XLF moving just yet. I think it will later, but not yet. And the IAA, which is the broker-dealer index, holding quite nicely, down 24 cents. But I don't think this is a big move yet, because I don't think the people are suddenly flocking into the market at this point. This could just be a belated rally to say, hey, markets, some of the indices went to all-time highs. I don't see anything yet. I'd love to see it, but I don't. Now let's go to gold. See, now gold, as far as I'm concerned, gold is up $4. All week it's had the opportunity, because there's been crises all over the show, economically, here, just in terms of what has been discussed in terms of potential sabotage, or even if it was just rumor about chips being in 30 of the major companies that were put in by the Chinese. That's not yet been proven. I don't think it has. I don't know. But it was discussed. That's one. The global crisis. The overseas markets are not doing well at all. Look at the EEM. I keep getting calls about that every week, and I say, no, no, no. Look at the FXI. That's the China 225 index. I think it's called 225. China large cap ETF. Nothing there yet. Look at that weekly chart in the middle, daily on the left, weekly in the middle, monthly on the right. No, I don't see anything. Hong Kong, EWH. Yep, Hong Kong, look at that, nothing there. Testing the 200 period moving average in the weekly, down 8.18 right now in that ETF. So yeah, I'm just not looking at it. So let's go back to gold and say, if gold is going to move, there's going to be something happening probably next week. And what you need to see is gold not just hitting 1225 to go above the weekly 14 period moving average, but really to see the kind of power that says every time it rallies, it makes a new recovery high and the lows are rising. And all of a sudden it becomes a focus. And you see stocks like, well, I like to use ASA, although we don't often trade it, as kind of a benchmark. That made a peak D and it's holding quite nicely at 894. It's just South African gold companies, about 5 of them, I believe. But I don't see anything yet. And silver, same thing. Silver right now is trading at up 5 cents. It's holding quite nicely after a nice week, going to a peak E from a low below 14 and then over 14.80. And now it's trading at 14.64. Weekly chart is holding quite nicely. But nothing to really see here. And the dollar, which should have been smacked because the British pound had a big move up, no, nothing. It's down 4 cents at 95.72. We remain long from 90. It went to 90, almost 97, pulled back to 93.81. Now it's back up at 95.71. I like the way it's acting. Next week is going to, for this weekly chart, the single leg A, gray A, because it's under that peak F. This is going to be so important next week. Why? Because if the dollar manages, even if it's consolidating, but if it manages just once to touch the 96.47 area, just kind of get up there, 97.40, 90, did I say 96.47 area. That would be really good action, start a leg B. But if it plunges and goes under 95, it's at 95.71, under 95.25, I'd start to look at it and say, consolidation is going to last a lot longer. Okay, so that's the dollar. If you look at the EUR USD, which had a nice bounce earlier in the day, and then now it's stalled. It's way at the bottom. It's at 1.15. I don't see anything yet. I just see the weekly chart is still very weak. So is the monthly. If you look at the USD JPY, this is the yen, which actually did go. USD JPY, which did go to a recovery high, to a peak F top. I'm calling it an F for now. 113.67 at 114.50 what? 58 on the 3rd. Consolidating here, monthly chart is good in leg C. It's that weekly chart that's gone to a leg D with an inverted kind of a hangman so far. Doji candle for leg D. MACD is good. Stochastic's good. Okay, at 79%, I would have preferred 83%. Then I'd feel much more confident. This is digesting big gains. So the yen, we're watching closely. Now, here comes the issue. The TLT. This is the Lehman 20-year T-bond fund. Went to a lower low today. It's trading at 112.94. I have to tell you that this is portending much more reaction to the higher yields than a lot of people were thinking. Look, the HGX, this is the home bills, Philadelphia home sector index, way down 360 at 276.86. Just the beginning of the year, it was up at the 370 area, 68, I think it was, 369.35, 15, 369.15, and now it's trading at 276. I mean, that's almost 100 points, almost cut by a third. That is huge, 30% decline. Now, if I'm looking at the weekly, the monthly charts, I'm going to go through this again. I want to be as clear as I can. Within the context of weekly charts, you got to go 120-minute chart, very short term, daily chart, short term. If the daily charts start to sink, you got to watch the weekly charts. Now, when the weekly charts, let's go back now because I want to look at the TFNN and X, the 10-year. Look at this monthly chart. Look how the weekly chart broke the rectangle, went above the peak F31.15 high, the week of May the 18th, gone to peak A, peak B, and now it's in G/C. This has all the look of a C because the MACD just crossed positive, stochastics at 86% in the weekly, and that monthly chart is technically very strong. I think 33.27 is my target on the 10-year over the next, I'd say, month and a half or so. I'm watching this very closely. Now, here's the conundrum. We're in leg C in the 10-year, the TNX, and it should go to a D. But wait a minute. How do you put this together with Cintas down at its lows, Amazon taking a huge breather, the week chart is going to be affected by, and Home Depot, the very, very weak. Is that on it? Slowing down? I'll put it together.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back. So the SMHs are down 2.66 at 101.98. This is the first time that they've broken that uptrend. This is the wedge-shaped pattern rising. Going to the apex, it's like a flag pattern. Let's go to Charlie in Framingham. Charlie, how are you?
I'm doing great. Can you hear me okay?
I certainly can.
Wonderful. Basil, it's good. You just brought up the SMHs. I have a position that I just got into. It's SOXS.
Okay, that's a semiconductor. That's a 3 times short. Wow, what a big move. I'm so upset because I was looking at that for subscribers, trying to get in, missed it, and look at this move. In 2 days, it's gone from 980 to 10.98, and this is the direction daily inverse semiconductor, 3 times short the SMHs. Huge move. Congratulations. Now what are you going to do,
Thank you.
Charlie?
That's why I'm calling.
So this is very interesting because I've spoken about this for so long. I've been saying that peak D that was made at 114.55 back in March, and the way I'm analyzing the semis, my impression was that the huge moves that they had the last 2 years and the projections that I heard about through a friend for this coming year just did not make sense at all. It seemed to me that they were still projecting. They didn't expect the big moves in 2017. They were completely surprised by some of the orders that came in early in 2018, and they just kept projecting out, and that seemed to me like it was not right. So now all of a sudden in one day it breaks, bam, it breaks the 200-period moving average of 103.47 in the SMH daily chart. It broke the uptrend. You can see this rising inside track Chapman wave little channel that gives you where it almost always got propelled and went to the top part and then got repelled on the declining channel. So now the MACD and stochastic have been very poor for months. So I'm looking at this and I'm now looking at the monthly chart, and that monthly chart has a pattern. I said I'm putting it in as an oval, not because I think that it is going to be at some point a stalk leg formation to break into the 119, 120 area. The big thing for me is how can it be an arch formation? Because if it pulls back further and at some point over the coming weeks, it takes out 96, the key support level, then all of a sudden you're looking at a different pattern altogether. So I'm going to suggest two things. One is, do you have enough to keep, because you're in at a decent level, do you have enough to keep a core position and then take a trading position off so that you've got your core, but at least you have enough in the core to make it worthwhile, but you're able still to take something off, maybe put a stop in on the SOX in terms of the shorter term trend, because I think the weekly chart is starting to improve enough in the SOXS to say, you know what, if there's another bad day on Monday, if we close really horribly today instead of that 50% rebound that we had yesterday, I don't think that's going to happen today. But if we close really badly and the SOX is above 10.85, it's at 11.03 right now, you could see a spike on Monday at the open, a real gap down in the market, which could take the SOXS into the 1135, 1145, or even into the 12s. So I'm saying just in terms of money management, even on the day, if it closes at the high, the SOXS closes at the high, just as I say, in terms of money management, you might want to take a little bit off to say, you know what, if something happens on Sunday night and the market suddenly turns around and it's gapping up, I've got a really nice profit and I've still got the core position. But if it gaps down again on Monday and you've taken a little bit off, yep, you'll be a little bit upset, but you'll still have your core position, because I'm thinking that the SMHs now you've built in a tremendous resistance at the point where you broke down, and that says at about 105.30, and it's at 107.75 right now. I would suspect that's the most it could bounce on any bounce next week. But in the meantime, you've lowered to 104.50, maybe a little bit higher. You've lowered your resistance level on the daily chart of the SMHs. So it's always a difficult thing to say. You got a fantastic gain. I bet you didn't expect to wake up today to such a nice profit. But the fact is, you still want to treat it with respect and have money management, because that's how over a year you start to build up a really nice pool of gains instead of seeing a huge gain suddenly disappear. And that's really what I'm thinking, that you might want to think of right now you can lower a stop on a small position to maybe 102.10. It's at 101.65. If it closes at the low, you have a choice. You can say, gee, I just got an extra couple of points. Maybe I won't get out at the close today. I'll keep it over the weekend, because even if there's a gap up, it would only go to where I would have taken off the money earlier in the day today. So you could then hold it, but that allows you a position to say, right now, for the rest of the day, I'm going to put a bit of a stop in for a small position. And that's kind of the way I'm looking at it. The fact that it's broken down the weekly chart, the MACD's bad, stochastic's bad, it says, you know what, now rallies should be much lower, and I'm looking at lower lows and lower highs as a potential for the SMHs. So I don't know what your time frame is. That's kind of the way I'm looking at it.
Yeah, well, to answer your question, I do have enough shares that I can go ahead and do it as you're suggesting. So that's been helpful.
Charlie, I'm going to say, you're the one that went into the trade. You did everything correct. I'm the one that's now saying now I'm the one that's giving the orders. No, I'm just saying to you, think it through. But I would definitely say a gain like this is very unusual in the market, and you want to respect that, and you want to be building capital as much as you can, and then you don't want to say, oh, I could have made. You want to say, wow, I really made something good. So I'm just saying, lower a stop, takes a little bit off, try to keep the core, and if it really bounces Monday or Tuesday, you could add back that part that you took off. But I do think that this has set the stage now that says the SMHs are kind of stuck in a downtrend. Certainly a down mode is confirmed in the weekly chart, which says there should be a limit to the upside. And that's why the monthly chart is still on a sideways trajectory. We don't know yet because the month has only barely begun. But the daily and weekly charts are saying, wow, this is not a good sign.
Okay. Basil, thank you very much. I appreciate your time always.
Well, thank you very much for calling. I always appreciate your call. Congratulations, Charlie. Great trade. And let's see how it goes next week. Thank you.
Yes, sir. Thank you. Bye.
So, folks, this is what I want you to say. I've got a bunch of questions. Yep, I've got questions about the stocks. We've just dealt with that. I just dealt with the Hong Kong XLI. Oh, XLI. This is what I want you to look at just before we go to the break. The XLI is still holding pretty darn well in the weekly chart and the monthly chart, and that is the industrials. If you look at the Dow, which is a mix, it too is holding very well. So I'll talk about the difference between the XLI and the Dow itself when we get back. I'll also talk about the other indices and other areas. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So just on the 2-minute chart, the E-mini is down 30 at 28.78 is in a leg E. This is the arch formation that says, if ever, especially now that it's said, I said to my subscribers that if at 12:30 the Dow, well, I mentioned if the Dow takes out that halfway through that wick, you got to be real careful. But now what we've got is this is the first time that I'm looking at it and I'm saying, at this exact point, either buyers are going to come in because of this arch formation right here, and there should be a bounce. If there's a bounce at all, it just means nothing. Unless at 28.78 right now, you start to see a trade for, I'd say 3 5-minute bars above 28.85. So that's not a big deal. 7 points when you're down 29 shouldn't be a big deal, but that's going to have to be. If that's the case, yep, then I can see a little bit of a bounce, and I can still see weakness at the close, unlike yesterday, where there was a pretty good rebound. Not in all the indices as much on a percentage basis, but they all did rebound some. So this is going to be a very important moment right now as we're talking, going into the end of my show, maybe into Steve's show, maybe into 1:15 time frame. So let's watch this closely, because if it breaks the 28.75 support and holds there, you could have even more selling into the close. Do you remember there were times way back, for those of you long time listeners of TFNN, you know that I used to talk about a 2-in-1 session, where sometimes you have a move to the downside and it could reverse at noon and have the same move to the upside. But sometimes you have a session that's sharply down. There's this attempt to make a rally in the midday session. That's Eastern time. And then it creates like a propeller shaft, and then suddenly you get an equal move to the downside. You don't want to see that. You do not want to see a 500-point down move today. That would just, that would be terrible. Okay, so now let's get back to our story. And our story says, I want to look at what I think is important. I want to go through this again. We looked at Cintas, big problem. And it's the overalls uniform rentals. I wanted to look at Amazon. At least for now, before the season begins, Amazon is saying, I'm coming off the top. I'm coming off the top in a very, for many, a surprising manner. And I usually go into this time period. Let me show you something here. Yeah, look, last year, October, it took off in October, back around the week of the 29th of September, 2017 at 9:31, and it just didn't rest up until not even after the end of the year. It went all the way. In fact, it's still going. It's the same move. It had just a couple of brief, small percentage pullbacks, and then it went to higher highs. So this will be the first time that we're looking at time and price. If Amazon takes out 1800 support in the next few days. Closes under 1800 support. And the SPY is already in a sell mode in the daily. Nothing, not even a sell signal yet in the weekly, because we haven't seen the stochastic at 80%. It needs to go under 80%. The MACD needs to cross negative, and you want to see, which is happening now, the 9-period moving average support taken out. But I'm actually saying in the weekly chart, in this particular instance, until we see the 285 level in the SPY taken out on a closing basis, that's the 14-period moving average, I'm not going to even talk about a sell signal in the weekly chart. So this is a really important moment. Home Depot. Home Depot, this is cash, my cash index, CASH. Doesn't mean cash, it means CASH. And the only way I could ever remember it by giving it some kind of acronym there. Okay, so 195.96 down 2.89 in Home Depot. Look at that peak D in the weekly chart. Now, I'm going to go through this again in the monthly. I've got it as a C. I can't name it as anything else. Let's just deal with that. The monthly chart is turning down, but the technicals, it's a monthly chart. How can we even talk about it? But the weekly chart is a bad peak D. So that's, I consider this to be important. I consider that if you're starting to see recessionary signs in certain areas, certainly the home builders, and certainly in the charts I'm showing right now, and if Amazon, which is in everything, starts to pull back deeper, I've got to respect this and say, I like to look at both sides of the coin, maybe sometimes too much, but at the same time, I'm looking at I've been looking at a diverse market for too many weeks, with the IWM flailing badly and the Dow trying to make an all-time high, and then it does. And now all the little caterpillars, all the little birds, all the little ducks are sitting in a row, and it's not good. So I'm looking at those monthly charts, and I'm saying, respect them. Look at this, Boeing. Boeing goes to a peak D in the daily chart. It's only down 5 today, 384. Hasn't given any sign in the, makes a high of 394.28 on the 3rd. I'm looking for round numbers. Round numbers, no. Okay, no round numbers, so those are no clue. The MACD is good, the stochastics at 91%. I've got to consider that it's still an important stock, that until Boeing really starts to trade, not take out, but trade at the 371, 369 area for a couple of days, there are no signs here yet that this is tanking, and that's very important to me. While I was talking about, I thought of something that I had to talk about. Yes, I didn't do high-grade copper. High-grade copper is pulling back, made a kind of a double top peak C1, C2 in the daily chart at the lower end. This is something to watch. And wood, which I show my subscribers usually every weekend, this is the global iShares of the Timber and Forestry ETF. This is worldwide. This is saying, hey, there's a slowdown between copper and this Timber and Forestry ETF. I'm saying this is something to respect, that there's a huge diversion. And now you've got Google. I'm going to Google if you don't mind. So for Alphabet, down 18. This is a daily chart at 1273, gave a sell signal. I can't remember. I think that was peak, wasn't that a peak E? Yep, a peak E right there on the 27th of, there it is, on the 27th of July, 1273.99, just missed that round number, 1274. And now it's trading at where? 1150. That's a big move for Google. Netflix is down, whoa, down 5% today, 344, peak E top right there. Second top, the first one was in the weekly chart of 423.21, made July the 22nd. And here's the peak E in the monthly charts. I have to respect the fact that this could turn into not just a little bit of a pullback, it could turn into a more deep one. It might be time, it might be speed, it might be a combination. But at this particular point, the trend, the tide has been changing in all the different indices. The Dow was the last one to make its all-time high. The NYA, which is the New York Stock Exchange, failed miserably at a peak in the weekly chart. It failed miserably to get to its January high above 30,600. 700 points lower right now at 12,900, down 0.60 on the day. Sorry, that's down 7.9, 60%. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So now we've got the E-mini at about 28.82. It's just trying a little bit to rally. I don't know if it's going to be able to, but this is that moment, because if it can't rally now into, it's 1 o'clock Eastern time, if it can't rally into 2:15 or so with a pretty decent bounce, I think there's going to be quite a lot of selling going on. Okay, so the question was that this is the Dow German index. It's not the DAX. It's exactly the same chart pattern. It's just different prices. It doesn't look good. Doesn't look good in the daily. Look at this. If you look at that pattern, patterns repeat. And look at that monthly chart. The same pattern in the weekly is in the monthly of the TLT, and look how it broke down. So that says to me, you've just got to be really careful. Now you've got interest rates, and when inflation actually picks up its ugly head, it's going to be so quick. So I had a question just now about, what was it? It was, excuse me, a Mosaic. This is in the agricultural sector. Where did that go? Try it again. MOS. And my answer was, person has been long, a long time. Should I take some profits? I said, no, it's a peak F in the daily, but that weekly has 200-period moving average support and 9-period moving average support between 31.50 and 30. So between 31s and 30, you've got support. Take a little bit off if you're a little bit nervous about MOS at 33, down 78 cents. But that's the area that should hold support. If it goes under that, that's something else. But so far, I wouldn't get carried away. If you're a little nervous, take something off. Okay, so we've got the weekend coming. Hope I'm going to be able to get as many charts out as I usually like to do. I'm not sure how it's going to work. But in the meantime, this is what we're looking at. A really lousy close today says we could be, in fact, having a gap down on Monday, and then maybe there's an intra-week bounce. But in the meantime, the fact that we've got 2 days in a row with triple-digit decline in the Dow says, got to be very careful. We've already accomplished this thing I call the Chapman wave Roman candle breakdown. We went under it. We're now under the 14-period moving average. We're right on support here. This says to me that that weekly chart next week, 26,000 to 25,800, is going to be absolutely key support in that weekly chart coming up. Have a wonderful weekend. Check out my opening call, a very informative newsletter, and I'll be back on that wonderful weekend. Stay tuned for Steve, Nate, and Tom.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.